Hey, good morning, everybody. So, I just sent you guys a message about the oil. So, the oil is this graph over here in the right side. I put the monthly graph so you guys, first of all, could identify a head and shoulder, right? Head and shoulder. So, in this pink line, basically, is the supply, right? Of course, if you break this down, the head and shoulder formation is already gone. So far we have, as you call, a bearish needle. Of course, that could be changed for a bullish needle too, because so far we have the 3 EMAs pass inside this candle, right? Last month, big candle. In the follow order, 20, now 8 and 3. But if you see a drop, of course, the 3, is being going down. It's over here so far, the EMA 3 is passing by below EMA 8. Of course, if you go up and you see the last high after, will form a bullish needle, but tend to be a bearish needle. We just need to wait for confirmation. Look at the DMI and the ADX. The ADX, right, showing that price is not more accelerated. Of course, came from acceleration because it was a big move, and then, tend, to start to revert. Of course, the DMI has a bullish enlace. The DMI plus at the top and the DMI minus at the bottom. So this is a bullish sign. So we have divergence in the graph, right? In the monthly graph, for example, the DMIs is still bullish, but the TRIX is below zero, but shows so far accumulation. As soon we keep going down, certify the bearish needle. Otherwise, if you see this enlace, the yellow try to pass by the white and try to go to positive, we supposed to be see a bullish needle instead of a bearish needle, right? But so far it's bearish TRIX, is bearish MACD, and we are even oversold or even overbought, right? RSE is still at 50. So we have space, of course, to go up and down. But so far, the supply zone have been respected, the pink line. We have been forming a head and shoulder, and we have a bearish needle, only one bullish divergence, and so far is leaving a Harami cross. It's good to see. I prefer, a red Harami cross like this one. See, observe like this one. High after we saw a drop, back testing EMA 200, and then went up, right? So could you form a Harami cross exactly like this one and force asset to go down? Of course, that commodities like tech are really sensitive for higher dollar and higher yields, right? So we need, consequently, to see the movement that I already project to you guys. First downtrend demand 103.081 so far respond very well from here. Hold on, let's refresh. Otherwise, if you lose this first demand zone, I'm looking for the inverse head and shoulder. Try to backtest 101.91. Here you'll be a huge demand zone, right? So the two options that I told you guys, one is, I give it three at least. One goes straight to 105, come back to 104, 300, to then go to 116. The second one that I gave to you guys is see a rejection over here at 104.300, then go back to 102.91, form an inverse head and shoulder, consequently give a brief to risky assets, and then going back up, right? And the last one is like a week off pattern, go back to a pivot, right? That guy 102, 103.081 and go back up at least to 106. To break 105, go to 106, coming back to 105.883 and then still going up and try to reach 116, 120. So far, the first demand zone, we see a response. Buyer was located over here. We have an important economic agenda today that I highlighted in the market wrap, right? Especially because you have data that could show us, already show us, economic weakness, right? Economic shrink, and other factors, that's the PCE, that could show us the inflation is not gone, right? You guys already realized that in Europe, French CPI skyrockets, Germany, where's CPI? No, the CPI was only to... Oh, Italy, sorry. Italy CPI skyrockets, and the entire, Europe community CPI also skyrocketed, right? Was expect 0.4, came 0.6, year over year expect 5.1, came 5.3. Remember that I told you guys that I expect a higher CPI this month? And also next month on 9/11, I expect a higher CPI in the US because it's summer vacation. Usually in summer vacation is the time that you expend a lot of money. Why? Since some point, our kids, you go back to school, so we need to buy school supplies, and during the vacation, we expend money. Vacation. Or with summer camps with our kids, or vacation with our families, right? So usually the CPI tends to skyrocket. Energy, oil, everything, commodities in general, mainly the commodities that we really need to use in the day by day, food and energy, right? And consequently everything else, right? Summer, vacation, big vacation times. So far, I was right. At least Europe in general skyrockets. I don't know if PCE is coming higher because PCE, they remove volatile assets like gasoline, like oil, and like energy, right? So those ones usually skyrocket. You guys already saw in the oil graph, right? Energy, oil, so already jump. Okay, but now you guys understand the test about the oil. We need to wait up to the close. Cannot break the demand to form a perfect head and shoulder in the monthly graph with a bearish needle. Okay, so what the oil is telling us, if we didn't break the demand and all the indications, still showing sell sign. Okay, especially we need to see a bearish enlace between DMAs and also ADX. Okay, so we need to wait for the confirmation. If you saw the confirmation of oil, my bet is CPI is going higher, yield is going higher, and Federal Reserve will raise rates. Dollar strength, yields up, risky assets in general down. So September could be ugly, based at least in the oil graph so far, monthly graph. Okay, talk about today. Regarding yields, I saw you guys talk about Ballard. I don't know him. I don't follow him either. I follow, I don't follow too much people. Even if I have a lot of followers. I follow a lot of people in Twitter. I don't follow their posts, I'm more in Twitter to post myself, then look our other posts. But on August 22, I placed the yields to you guys pattern, and I remember that somebody criticized me. Oh, if you go back to 15%, you see a default. Yes, this could happen. I don't know if you will going to happen, and also I don't know if you go back to 15-16% as you saw back in 80s. But over here in the graph that I post to you guys, I showed the recession back in 75, the yield is going really high, in the middle of the recession. Then yields start to price a deflationary environment, and then Bank of Japan back in 78 and 80s, start to print money. Bank of Japan was responsible to turn it on the money printer, right? And you saw skyrocket yields up to 81 and 82, and then we saw the Paul Volcker, right? In that age, the dot-com in 2000, everything was related with these spiking yields. As you can see back over here in 2000, in 2000 we saw the dot-com. So 2000 something like here, and the yields is spiking, right? Yields is spiking. Anyway, what's happened? 2008, Obama era. Obama started to print money. Obama was responsible to turn the US print money machine on, right? You saw the yields spiking, but high after, yields coming back down, showing us a deflationary system. Basically, yields since the spike in 81, showing us an economic weakness, right? So central banks was forced to print money, right, to try to save the economy. And you guys have been seeing that it's not working. It's like, cancer. The doctors ask the patients to do chemotherapy to see if they will be able to be cured. But in some point, when you start to see the metastasis, we just need to wait to die, right? Don't have cure. And so far, the worldwide economy is suffering from cancer. And they have been injecting money. And at the end, they try to control things, high rates, bring recession, resetting things. Things was reset over here in the 80s, things was reset in 2000, and so on. Think it was reset back in 29, and so on. At least we mess it up. Human being mess it up. Period. Right? So I post this in August 22, and I also give you guys two movements regarding yields. One, to go back to 4.101, that's 1998 bottom, right? And then another spike to back test 93 bottom at 5.190. Means inflation will persist. Yield is still going up is because inflation will persist. Inflation is not a bad thing. Inflation is a good thing when it's healthy. Means economy is working well. People have money without any intervention. People have jobs, people have been well paid, and people, generating profit for corporations. Right? So inflation is not a bad thing. Inflation is a good thing when it's going high in an economic health environment. Something that we don't have nowadays. Something that was provoked by injection of the money since 80s, 1980. We like culture in Portuguese oba-oba, right? Oba-oba is because everybody have money and everybody start to expend money, even more than they make, because the credit is very easy to acquire and money is really cheap. Some things that we are not seeing this nowadays, right? Things are changing. You see in the dollar, you see in the yield is going up. So the cost of the money, that's a very easy formula. You just, multiply DXY with 10 years yield. They can show you guys, the cost of the money. The cost of the money is going high. Liquidity is going low, right? I show you guys also the spreads between government and corporate bonds. The spread is not too high, so we still have liquidity. Regarding buybacks, you guys have been seeing buybacks. Another day I spoke with my wife, and she said, Fabio, sometimes they could be buybacks even in all-time highs, because if the dividends is much more expensive, the cost to borrow. If the cost of to borrow is cheaper compared with the dividend yields, companies usually is forced to buy back even all-time high, because you'll be at the end cheaper for them because they don't need to pay higher dividends, right? And also the cost of the borrow is lower comparing with the dividend yields. So sometimes the corporates do that. I don't know if it's the case. I'm just passing by the information. Okay? Also, the current buybacks is supporting market to keep it higher. As you guys saw, NVIDIA announced $25 billion buyback, if I'm not wrong. Microsoft, Apple, and etc. Because also they pay dividends. Okay? So you guys understand sometimes why they report buyback is something related with the dividend yields. Something that I didn't know before as well. Okay? So regarding today, we talk about too much about the future, something that we cannot predict. We cannot tell that. That's very easy. You saw a lot of posts. Markets now is a bull market, and we see a jump up to SPX go to 6K, 10K, 15K. Those predictions not wrong, because the market was designed to go up. I can come to you and tell you, market you go to 10,000 points. But when? I don't know. I know that you will go there because that's the nature of the markets. Go up. No, everybody can tell that. And you not be wrong, right? You not be wrong. Anyway, so let me try to open my, it's 9:50. Let me open the market wrap and then we will review. First thing, they add liquidity. I post over here, every time that you see a drop in DX, markets drop high after. The DX is still printing bullish, but it's avoided to break 50%. Avoid to break 48%. They have been adding liquidity, and you saw, a drop during the intraday, right? So usually nowadays they have been adding liquidity to sell, not to buy. But you guys have been seeing that the DUX have been printed between 49, 45. It didn't print below 44%. That when we start to see a bearish signs. But, it's being supported at 45%. But you guys notice that as soon, they keep going down like this, like here. First you spike up and then you market bottom, right? Then market bottom. And as soon market bottom, you guys realize that the DIX start to jump again higher, and then market high after go back up, going melt up, right? It's going back up. We are in a process that DX is going down a lot, right? Came from 53, 55% to 45%. Still printing bullish, but like in the edge between bullish and bearish prints, right? So I, put out the notes over here to you guys. But yesterday print 48%. They decide to add liquidity. Why? They want to sell? I don't know. They want to melt up? I don't know either. So volatility have been suppressed. Suppressed volatility nowadays tend to force markets going up, right? I explain you guys already why. And yesterday, Let's wait to open my market wrap. It's a little bit slow, my computer. By the way, the CPI is supposed printed, right? So let's check it out. Okay, CPI came stable. Initial jobless claim going down. So this tended to see, the jobless claim 4 weeks came higher, is not good. But the CPI or personal income lower, personal spending higher. That means inflation persists. We have been expending much more money compared to what we are making. So for me over here, still showing contraction. Jobless claim above. People have been fired. We knew that. As I told you guys, for example, about Verizon, the operation is going to India, right? We knew that. We are in a recession. Start to enter in a recession. Jobs will be lost. Jobs will be lost in US. Jobs will move to cheaper, to offshore. Cheaper countries like India, as they did before, like Brazil. But Brazil, the currency nowadays is not showing us a sign that the job will go to there, because the labor cost over there is also higher. But showing us that India is supposed to be grow faster, more than US, because jobs will be moved to India, especially technological jobs. India, Vietnam, and etc. Labor cost. So the data wasn't bullish. If the market's going up, depends on the dealers. We talk about the liquidity, and we need now to highlight the big orders, the big order that we printed yesterday, that are highlighted over here. Also, if you check the option book, for 1,500 we have a big negative gamma that usually is used as a support. So if this player here at 10.56 sold those contracts, for me is a dealer suppressing volatility to force market trade above 4,500 and help dealers to pump the market up to 911. Because in 911 we have a very calm agenda up to 911 when you have CPI and FONC, right? So 4,500 is the level that you need to looking for, especially today, end of the month, and consequently could be helped to suppress the volatility. Okay? Remember, the implied volatility in the call contracts is higher than the input contracts. So to see burns call deltas, we need to see VIX spiking. Consequently, you see VIX spiking head days. Then you start to see implied volatility input contracts is going higher, because you also have like higher Vega. So call deltas will be burning. Suppressing volatility, this order could be like a suppressed volatility order to keep markets above 4,500. Then, deltas tend to, theta, will help to burn put deltas and force markets going up, especially for those that have a higher negative delta portfolio. They will be forced to neutralize their portfolio buying. For those that are long gamma, have been selling harder future, because they need to hedge using their underlying assets. So you guys, it's totally normal to see those big orders at the close because you know a lot of people. I mean, we are in a positive gamma, so dealers are long, so they need to hedge themselves selling the underlying asset. In this case, future. Guys, I finished by here. Right now 4,500. So basically I put in the summary 4,500 is the support. 4,440 could you be, you know, the maximum upside target, especially because we are in a positive gamma. The first level of resistance 4,522 that was set up yesterday. And if you lose 4,500, look for 4,478, 4,480 as a support. Take care, guys.